Welcome to Money Talks. I'm Genevieve Westcott, bringing you up to speed with your latest financial news from across New Zealand and around the world. Coming up in this edition, in the arable world, rainfall looks normal to above normal for the next 3 months, but Bay of Plenty and Southland growers have a warning for farmers. Find out why our Kiwi cattle prices are predicted to stay at current levels or lift, and why dairy global prices will feel the brunt of further pressure in the short term. The outlook for farm gate prices. Kicking off our quick rural roundup today, arable, and it's been an ideal season for some. Canterbury and the Hawke's Bay have received just enough rain and sunshine for an excellent growing season, one of the best in 25 years. But other areas weren't so lucky. Joining me now is rural economist James Shortall. And James, Bay of Plenty growers are now warning dairy farmers that silage supplies are likely to be in tight supply for the year.
Yeah, I mean, as you pointed out, then there's going to be a couple of areas that have done well. You know, they've had really good rain. Some others haven't had such a great year. But, you know, in some areas there's also been too much rain, so they just haven't really been able to get on with their crops. With maize in particular, they've failed, and some of the other crops haven't been too sharp either. Southland
farmers are having a heck of a time down there, the growers there. Hardly any rain between November and, I think, January.
Yeah, so I mean they were in sort of a drought situation and through parts of Otago for quite a period, and so that's you know, when at the time when they're really trying to get crops going for the winter period. Crops are really important for that part of the of New Zealand to feed cows, feed their livestock through the winter, and in a lot of cases they've just failed, and they're going to be going in with the really stretched supplies.
Yeah, and straw's going to be way down. Apparently they've only harvested half so far this year of what they had this time last year.
Yeah, so there's going to be some fairly big issues for, you know, farmers down there. They're just going to be going in with some pretty lean supplies, and you know, potentially they may have to be looking at drying off cows earlier, and it will have an impact on next season's production.
Let's talk now a little bit about cattle prices here at home. What's happening?
Yeah, well, it's been interesting. We've seen schedule prices here at home drop over the past couple of months, and they have probably been a bit more steady in the past 4 weeks at least, which is be welcome news for farmers. But they're probably not too excited about where prices currently are. And there's a couple of impacts that have been occurring. You've probably got a few meat companies that really had to hold prices up through the latter part of last year. Meanwhile, in overseas markets, and international prices are still looking pretty good.
Now, our markets in the U.S. and in Europe still remain pretty firm, so that's good news.
Yeah, it is good news, but I'm just a little bit concerned about where things are going. Prices are still looking good, so the US beef prices have been at all-time highs, but you're starting to hear some murmurs out of the US that supplies are coming on board. Demand really isn't there, and all of a sudden you've got more exports out of the likes of Australia going into the US market, which is going to have an impact on that sort of aspect. So I wouldn't be surprised to see some of those prices come off their highs.
Global dairy prices now around the world, they continue to soften. What's your pick?
Yeah, I wouldn't be surprised to see dairy prices slip just a little bit more. So, I mean, this is probably a common theme. I am a little bit nervous about some of these agricultural markets where they're sitting at the moment. We're still not really getting out of that malaise that's been happening globally for a little while, and you know, that's going to have an impact. And at the same time, we're starting to see supplies lift. So, we've seen, you know, a very strong season here at home in New Zealand with production up around 10%. We're also seeing production lifting in other parts of the world, and that only means one thing: it's probably going to put pressure on prices.
Yeah, and we know in the Northern Hemisphere they're having a heck of a spring flush like we've had here.
Yeah, so I mean that's going to start coming on board, impacting on the market's prices. I mean, dairy payouts still, let's be honest, are still very, very strong, and prices are pretty good. We're not seeing the volatility that we have seen over the past couple of years. So, you know, we're seeing prices fluctuate by, you know, under 2, 3, 4% each month, which is pretty good news.
And farm gate prices, they remain solid, but they have been revised downwards.
Yeah, they have been revised downwards. I guess the interesting thing for farmers will be leading into next season, and they're going to be picking up. You know, usually Fonterra will provide a forecast for the next season over the next couple of months. That'll be important to a lot of people around the country, and there's every chance that we may just see those prices slipping just a little bit.
Now, overall, James, export commodity prices are down, I think, over 17% from a year ago when they had their peak. Does that concern you?
Oh, of course. I mean, we have seen those export prices drop, and that's been reflected in the farm gate returns falling, across a whole range of sectors. But what we're starting to see is that those commodity prices haven't really picked up. The Kiwi dollar has remained strong. We're still hanging around that 82-cent mark against the US dollar. We've been higher, and it really just looks like we are going to sit around those levels for the time being. So that is going to be a problem for farmers.
Butter prices dropped 6% to a 29-month low. Skim milk powder prices down 4%, a 15-month low. Cheese and whole milk powder prices dropped 3%. When it comes to the export commodity basket, if you like, most of them are dairy products. 43%, something like that. So it continues to wag the dog, doesn't it?
Yeah,
can we say?
When you read it like that, it sounds pretty miserable, doesn't it?
It does. That's
there's not
horrible.
a lot of positive stuff to talk about, but
and yet Fonterra had a sensational half-yearly result. So how do you marry up all of the doom and gloom you hear, and yet we're still doing so well?
Well, I guess there's two things. I mean, when some of those commodity prices are down, it does enable them to make a little bit more margin at the value-added side of things. So they're able to recover some of the cost there, which is good for farmers. But while we are seeing those commodity prices down, then farm gate returns are still very, very solid, on a historical basis.
Lamb prices are down this past month now 2%. Concerning you?
Yeah, I think lamb is one where probably been picking it for the last 12 months that prices, that's bucked the trend, let's be honest, that UK economy is struggling, lamb's a premium product, and everything would suggest that it would drop, but it hasn't. We're now starting to see some of those effects coming through.
But beef was up 2% to a new high.
Yeah, I mean, well, that's it's interesting because we've seen schedule prices drop just slightly here for farm gate returns. So those export prices going to the US market, yes, they are starting to get some very good returns because the US price is at all-time highs.
Interesting. Now, I saw the news that Fonterra is looking at building a new plant down south somewhere. They have so much production. How much more can Fonterra continue to expand in such a small country?
Well, I mean, when you've got dairy production lifting 10% in a season, which we've seen over the past 12 months, and that's huge. I mean, and really they have to keep building factories to process the milk. When there's more milk coming on board, then they've got to do something with it. And we're still seeing further expansion in the Canterbury, the Southland regions. But when you add to that the fact that a lot of other areas have just had a great growing season, there's been more milk coming on board, and Fonterra need to deal with it.
So we're rocking on, baby.
Rocking on.
Okay, stand by. Thanks, James. Coming up after the break, in Australia and New Zealand, GDP growth came in lower than expected. The implications for interest rates. The latest U.S. job data disappoints. Where are the bright spots? And what did our government say when the International Monetary Fund asked us to stump up more money to bail out those European countries? But first, the country's biggest farmer, Landcorp, is celebrating a half-yearly profit that's up 31% to $11 million. Landcorp credits a good growing season and an increase in commodity prices, including meat and dairy. So answer this in our Farmers Facts and Figures quiz. What dividend does Landcorp expect to pay the New Zealand government for the 2012 season? Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what dividend does Landcorp expect to pay the New Zealand government for the 2012 season? $15 million. Global financial markets appear to have stabilized somewhat as the European Central Bank's measures to support the banking system have begun to take effect, kind of. We're back with James Shortall, and joining us now is Jeff Matthews, Senior Financial Advisor for Spicers. Jeff, what's your take on the global financial markets at the moment? U.S. and Europe have both been down.
Yeah, but I mean, it's been the best first quarter in many years. So, I mean, if you look at the US market, it's up 12% for the first 3 months of this year. Given the fact that it rose so much, you're bound to get some profit taking. And so there was a weak jobs number last week, and there's a little bit of concern about the bond yields in Spain and Italy. And so the market's looking for an excuse basically to take profits. But this morning, Alcoa is the first Dow, the top 30 companies to report, and it surprised on the upside. So over the next couple of weeks, you'll get people like Google and Apple and some of the banks, and if they have reasonable results, you can expect the market to rise.
Let's talk about the U.S. economy. They added just 120,000 jobs in March, well below the expected level of 203,000.
But that's the danger when you're looking kind of month by month, week by week. You can get some quite big distortions, and all of a sudden you can get a revamp on the numbers next month. You might find the numbers 250 next month, and there's a revision to the March numbers. So you shouldn't focus too much on the month by month numbers.
The fact remains, apparently no American president has been re-elected when unemployment sits 8%, and we're up to 8.3. Yeah. Although we see now this morning that Rick Santorum has dropped out of the Republican race, leaves it wide open now. We know at least who's going to be going up against Barack.
The hollow man.
The hollow man, as some call him.
The man who stands for nothing.
Well, how do you think his chances are looking?
What, Mitt Romney or Obama?
Obama.
I think there's a reasonable chance. Republicans, even talking to friends who are Republicans, that they see Romney as the hollow man. He flip-flops on all sorts of things. What are his core values? What does he really stand for? He'll say whatever he says to you, and then he'll say something almost entirely different to a different bunch of people. So at the end of the day, you can't be all things to all people.
Let's turn now to Europe and looking over at Spain, of course. Spain is now the new hot spot. What's your read on how much worse it can get there? Incredible unemployment rate over, 24%? Youth unemployment about 50%. This is social nightmare territory, is it not, James?
Oh, I mean, definitely. We're talking about consequences for decades here, And I mean, how do you turn that sort of thing around? And it's not going to turn around in the next 5 years. I mean, there's going to be, we're talking about a hollow man, this is the hollow country, whereas we're going to see things, happen there for a while to come, and there's going to be some real issues going forward, and it's just going to be a drag on the European economy and for the global economy. And these things, we've been talking about them for years now, and they haven't been solved, and they're not going to be soon either.
Meantime, the International Monetary Fund has come calling to New Zealand saying, listen, could you stump up with a few more $100 million to help out Europe? Do you think we should be doing that?
Without a doubt. I don't think we have any choice not to, because the security of the financial system globally is just critically important, and if it doesn't function, then we go into another 2008, and that's not what we want to be doing. So if we've got to put some money in there, is what we're going to do. Yeah, so we'll all be squeezed a little bit harder to save out the rest of the world. Hopefully we'll get it back, or get some of it back at some point, but perhaps not. But it's just one of those things in order to make sure that the global economy is able to grow, is stable, and that we can sell our products into other markets. All eyes still, of course, gentlemen, on China. Real questions now apparently being asked about just how much growth slowdown there might be there. That's going to affect us too, big time. I mean, people have got used to 10 and 11% growth, so you say it's going to grow at 8. I mean, what a terrible problem to have. And in fact, it's bound to slow down over time, because if you look at Japan and Korea and Taiwan, they all grew at phenomenal rates. And as they start to become richer, the ability to stay at those kind of growth rates reduces. So it's a natural phenomenon. Our own GDP growth rates coming in have not been that great as well, either here or across the ditch. Your analysis? Just, you've got weakness in Europe, but if you're a Chinese manufacturer, 20% or 25% of your export go to Europe, and that market is pretty much switched off at the moment. So it has a flow-on effect all, throughout. And then if China's slowing down, then they don't need to buy as much raw material from Australia. So at least we're in a better spot with the kind of soft commodities that we have to offer. And are we still picking it right at keeping interest rates on hold? It still looks like the Fed's going to keep interest rates low until 2014, and are looking at most bank economists, I'm not sure with James, but we're looking kind of the first quarter for next year for a move in the cash rate. Next month, of course, the government presents its budget. It's going to be a zero growth budget. How tough is it going to be, do you think, James? Well, I think we're already starting to see the consequences of some of those things coming through in the social sector and into the government sector. We're going to see some pretty tough cuts, I think, at those areas. I mean, I think the important thing here is that the government's transitioning from, stripping down some of the public services sector and really ramping up the economic engine and trying to grow. Primary export's been one, so that's great news for farmers. Food and beverage, trying to grow us over the next 10 years. So we're going to see, I think we'll see some growth in some areas, and we're going to see some pullback in other areas, and the public sector is going to be the one that really feels the pinch.
And I think water could be really great for us, certainly in terms of China. China has one of the lowest endowments of water anywhere in the world, and New Zealand is top of the world. This is an area that we should really be targeting, isn't it?
Yeah, I mean, how do you export it?
Export it through our food products,
well,
which I guess is what we do.
We grow
which is what? Wine,
well, wine, and
aquaculture.
we grow grass.
Yeah, kiwi, whatever, anything that takes water.
Yeah.
I mean, the critical thing when we're talking about China, and yes, we are seeing a slowdown, but the firepower that they have is just so significant when you look at some of their individual regions. They're another size of major economies, growing economies in themselves. You look at one area in particular, and it's the size of Malaysia, which we see as being a high growth destination for food and primary export products. That's just one region in China. So we talk about China and we don't probably give it justice, the size of the opportunity and the size of the impact that it's going to have on the New Zealand economy over the next 10, 15, 20 years. It's just huge.
And dare I say, China is watching very closely. 2 weeks ago, the Overseas Investment Office, the OIO here, sent back to the government ministers their decision on the crate for farms. The ministers are sitting on their hands, I would suggest. When are they going to make the call?
I haven't got a clue. I mean, they should just do the deal and get on with it.
Yeah, I think they should too. I don't think there'll be any surprises. No. I suspect they're going to give it to the Chinese.
Well, I wouldn't give it to them, but I mean, I like the idea of actually leasing the land. I mean, you know, China, if you're turners and growers, you can't actually buy land in China. You can lease it and develop kiwi fruit farms. So you could do a deal like that.
Yeah, there has been talk of
99-year lease.
Yeah, setting up a trust and that's how they get their land on leasehold.
But then you are discriminating. If a whole bunch of Germans want to buy 5 dairy farms in the South Island, it's okay. And because you're Chinese, it's not okay. I mean, that sends all the wrong messages.
Well, the messages will continue to be muddled, I think.
I think so.
And I think it puts foreign investment in this country at great risk.
It certainly puts a question mark over it.
Okay, thank you, gentlemen. Coming up after the break, Future Proof. Our experts tell us what they'll be watching over the next few days. Meantime, Nelson kiwi fruit growers are heading into harvest in better shape than many of their North Island colleagues, with the PSAV disease yet to spread to the region. And growers could well reap higher prices for their Gold Hort 16A fruit. So answer this in our Farmers Facts and Figures quiz. How many trays of gold kiwi fruit will be picked in Nelson this year? The answer after the break. Welcome back to Money Talks. Just before the break, we asked you how many trays of gold kiwi fruit will be picked in Nelson this year. 550,000 trays, up from 480,000 trays last year. And now it's time for Future Proof. And we're back with Jeff Matthews and James Shortall. And I see that there's some Chinese money now going to be buying up property in Gulf Harbor.
Well, originally Gulf Harbor was set up with Singaporean money, so we're just swapping one lot of Asian money for another one.
Jeff, I know you follow KiwiSaver very closely from a professional basis, and yet 78,000 Kiwis now have opted to put it on hold. What's going on?
I mean, if people are in financial difficulties, it's pretty hard to keep saving when you might have a mortgage or credit card debt where the interest rate is much, much higher than you're earning on your KiwiSaver. So short term, I understand it, but long term, then KiwiSaver is not going to do the job it's intended to do anyway, because the level of savings is too low. I mean, Australia's looking to move from 9% to 12. Places like Singapore are 20, and we've got, what have we got now? 3 plus 3. It's too low. But you've got to start somewhere, and I guess gradually KiwiSaver will drift into a compulsory mechanism gradually.
And now, of course, they're slowly changing the rules. Employer contributions, which used to be tax-free, aren't going to be anymore. What other kinds of changes might we see?
I'm not sure that you can tinker much more with it. Given the fact it's coming up 5 years, there's already been a number of changes. From the fund manager's point of view and from the investor's point of view, you can't keep tinkering with it. set the rules and let it slowly start to develop and build up. I think the last count at the end of December was over 10 billion. What you don't want is people constantly changing the rules.
So if you were advising young people today, would you advise them to still get into it?
Oh, absolutely. I mean, because you get the $1,000 kickstart at the beginning and you get a 50% subsidy, during the year, $550. So, I mean, it's a taxpayer subsidy. So why wouldn't you?
James, what are you going to be watching in the week ahead? What's caught your eye?
Well, I mean, you're talking about the OIO approval with the Crayford Farms. I think that's got to be a really interesting one, and it's been going on for quite a period now. But I mean, they should just make the decision and get on with it, because I think the hoopla has been around the public perception about where this is going and the issues around it. But I think most people have got their head around that it's going to Chinese interests. So let's just get on with it and move on. And we're already starting to see Fonterra, their CEO, talking about maybe joint ventures with an entity or that type of model in overseas markets. So people have moved on. I think the government needs to move on too. But that's going to be something that I'll be watching quite closely.
How about you, Jeff? What's caught your eye in the coming week?
Well, I was going to say, from a PR point of view, I mean, you want bad news, you want to get it out the way. Like the AC story, get rid of it.
Dump it immediately.
They just like a Band-Aid. They keep peeling it back and looking at it, and it never goes away.
But I can't believe it. I can't believe that they are dragging their heels this
can't
way.
Either.
What soft leadership.
It's pathetic. What I'm going to be looking at, basically, as I said, Alcoa came in this morning with its profits. It's the first of the major US corporates. Over the next couple of weeks, we'll get a much better flavour for how the first quarter's gone for US corporates. So really looking at corporate profitability.
I was really interested in the story that broke yesterday about Facebook buying up Instagram.
Instagram, yeah.
Which is basically a photo application for smartphones. This is a company that has 10 employees and actually makes no revenue, and yet they've paid $1 billion for it. What does that tell you?
They're buying potential.
Sounds like a good deal to me.
Oh, look,
for a developer, it sounds like a great deal.
Yeah.
How do we do more of that?
Well, that they started off a couple of years ago, and then they had 3 or 4 million people, and then a year later they had 7 times the amount of people. And you're looking for growth, and I mean, if they don't grab it, then Google or somebody else will try and grab the business. And so Facebook, is going to be awash with cash anyway. $1 billion, it's both cash and stock options, so it's not just cash. Unlike Trev down the line in.
Oh, Trev, Tika Wada Trev, or Tika Kofita, as they now say. Kofita.
Yeah, exactly.
Yeah. I think he did it all wrong.
He did.
Coming out, do you think that was the right thing to do?
Nope. I got asked on radio, what should he do? And I said, try and remain anonymous was the first point. And then second, basically take a little holiday, have a breather, think about what you want to do with the money, and then build a team of people that are going to support you.
They're going to hunt him down.
Absolutely. Yep.
Now listen, how about if we get him to buy the Crayford Farms? Well, wouldn't that be perfect?
Still not enough.
Still not enough.
Chinese have got more money than that, unfortunately. Yeah. So they'll be able to swallow that up pretty quickly.
But he could buy the Countdown supermarket in Huntley.
A lot of new data coming out of China on Friday, which will tell us whether or not we're going to have a kind of a soft slowdown or a hard landing. What are you picking?
Slow down. Just a gradual slowdown. I mean, they've got a lot of tools that they can use. I mean, what they did last year when they were worried about inflation was the central bank cranked up the amount of money that banks have to hold with the central bank on kind of 1% interest rate. So that got up to 20% of the bank's cash was basically locked away in a vault at the central bank. So all they've got to do is start unwinding that position and start pumping more money back into the economy. So, but what they don't want is a boom in, speculation in the housing market. But it's the Chinese, Communist Party's got their Congress this year, so you've got to change your leadership. You've got elections in the US. You're going to have a lot of variables this year. But I mean, life goes on. So I mean, everyday companies, if it's Apple or whomever, are out there just producing goods. They may shed some staff. They may buy another business. We know that US corporates are sitting on something like 1.5 trillion in cash. So at some point, there's going to be buying opportunities for them to merge or take over other businesses. We know that banks in Europe are trying to shed assets to get their balance sheets. So again, for a person or a bank who's cashed up in a strong position, they're able to pick up assets from those who are a bit stretched. So there's always opportunity.
Yeah, opportunity. And what opportunities do you see here at home, James, in the New Zealand economy? On a scale of 1 to 10, 1 being horrible, 10 being we are fantastic, leading the world, where would you put us right now?
Well, I guess probably if you looked at us on an average basis, then we're probably, I don't know, 4 or 5. You know, we're struggling along, let's be honest. But if you compare us to Spain, as you pointed out earlier on, we're probably like an 8 or a 9. You know, let's be honest. And it's those sort of dynamics that's driving the Kiwi dollar, driving interest rates. So I mean, there's a whole lot of things here that are problems and are issues for the New Zealand economy, and it's going to be a tough time, and it's not going to be a fantastic year coming up. But relatively speaking, we're holding in there damn well, and we're holding our own and doing pretty well relative to a lot of other places.
So look for happiness where you can, right?
That's right.
Be an optimist. Okay. Thanks to my guests, James Shortall and Jeff Matthews. Be sure to check out our website for all the latest news. Remember, there are shortcuts to happiness, and dancing is one of them.
Every day I'm shuffling. Shuffling.
Keep the faith. See you next time.